Well, welcome everyone. Looks like we've got quite a few attendees already on and more joining, but we're going to go ahead and get started. I'll speak kind of slowly here in the introduction to give everyone else the opportunity to get situated that's joining now. So I'd like to first thank everyone for their time today, investing their time with us. We developed the topic for today's webinar based on conversations we've been having lately with our existing customers as well as prospective ones. And it touches on a big trend that we're seeing right now in the industry. And in fact, if you've been on a phone call with me anytime over the past year or so, you've probably heard us talk about this trend. Next slide. For those that don't know me, my name's Michael Douglas, and I'll be today's host. I'm the Director of Accounts with ENFOS and going on my 12th year here with the company. Next slide. So before we begin, just a few logistical items. First, today's webinar is being recorded and will be sent to everyone within the next couple of days, along with the slides. All callers are muted, so we encourage you to please ask questions in the questions panel that should be on the right side of your screen in the GoToWebinar control panel. And also, time permitting, we'll answer as many of those questions as possible live. At the end, we have a Q&A session, and then we'll follow up through email with any that we're unable to get to. So many of you are on the call today are already customers or users of ENFOS, but some are not. So I'm going to provide a very brief introduction. And if you're interested in continuing the conversation, my contact information will be on the last slide. ENFOS is a software company, and we help organizations manage all of their project, financial, and environmental data around their environmental liability projects in one place. This is all that we do. Next slide. We're a cloud-based software as a service, meaning all you need to access ENFOS is an internet connection and a web browser. As I mentioned, ENFOS is designed as an expert system specifically for the environmental liability business. We provide our customers with data and context by allowing them to combine project management, environmental, and financial data all in one place. Strategic partners and suppliers of our customers have permission-based access, allowing them to collaborate on projects regarding scope, schedule, and budget to ensure a single version of the truth. We help our customers manage the entire reserve process throughout its life cycle by connecting the reserve and budgeting process with spend management inside of a project management framework. And we integrate on the back end with systems such as SAP and Ariba to streamline those business processes. Additionally, we provide a non-invasive environmental data management approach to allow our customers to not only own, but also take possession of their environmental data. Having that capability allows our customers, next slide, to manage their entire portfolio of environmental projects the exact same way at any scale while reducing level of effort, automating business workflow, and minimizing risks. And with that, I'd like to introduce the speaker for today, and that'll be Roger Well. Roger is a co-founder of ENFOS and currently serves as our Executive Vice President and Chief Operating Officer. Roger has over 30 years of experience in the field, having started his career as an environmental consultant. Roger has a bachelor's and a master's in geology in addition to an MBA. So with that, I'd like to turn it over to Roger to get us going on this topic.
Great, thanks, Mike. So I, again, repeat what Mike said. Welcome and thank you for attending. We do these quarterly webinars, and then we also have quarterly webinars that are more specific to our software. So every quarter we're doing 2 webinars. One of those sessions is a general business topic, and that's what today is about. So the agenda today that will follow will be broken down into overview of what you will learn. We'll spend time talking about the main topic, which is business scaling, as well as the role of technology in that. And we'll leave with conclusions and some key takeaways. What you will learn today, differences between scaling and growth, business scaling in downturns, leveraging technology to help you scale, and then lessons for the remediation industry. Okay, so before we get into the meat of this, just to set some context, as Mike touched on, we're really seeing some major trends happening right now because of the obvious, and that is the pandemic. And whether we like it or not, this has been a major disruption to the economy and to businesses or organizations responsible for managing remediation programs. The immediate impacts that we're seeing has been significant downsizing. And we're seeing as much as 40 or 50% headcount reductions in some businesses. So it's very deep cuts. The future impacts are going to be increased merger and acquisition activity as firms try to redefine themselves. So we will be seeing a lot more M&A activity probably in the next 2 to 5 years. Again, partly because caused by the impacts of the pandemic. Business scaling in the context of remediation management is really about the ability to add more program size and increased operational demands. So adding more of those, right? The program's getting bigger while maintaining or lowering costs. So we're going to jump in and get into the details. The first thing that we wanted to cover today is scaling versus growth, and really setting some definitions. In our industry, which is the software industry, we talk about business scaling all the time. As a startup company, you're looking to increase your revenue at a faster rate than you're increasing your costs. But growth, if you think about just growth, as revenue increases, cost increase. In remediation, we look at it as program size. So as the program size increases, the costs increase at relatively the same rate. That's how growth is defined. And you'll contrast that to the chart here on the right. Scaling is when the program size is growing at a faster rate than what your costs are growing. And that's what you're striving to achieve. You're trying to be able to scale your business so you can handle more work at the same or at a lower cost structure. I mentioned that we're seeing the trend of headcount reductions across the board. And what's interesting is that downsizing creates the same effect as growth does for organizations. If you are managing a portfolio of 1,000 sites that fall on the globe, like you're looking at here on the left-hand side, with a certain amount of people in your group, and you have to reduce that staff size because of a business downturn, what are you left with, right? You're left with survivors, people that have to do the same amount of work that was there before the downsizing, and that obviously presents a business challenge. So how do we adapt to changing conditions? What can we do to achieve maximum efficiency and still get our job done, meeting the same types of demands that we had before the downturn. Why is this important? Well, we're going to talk about 4 or 5 areas here. One, and I think the reason it's listed here is number 1, because I believe it's really the top issue here, is this is the role of leadership. Planning for change, building capability within the organization, being a tech vanguard, and establishing and maintaining a culture of operational efficiency. Certainly a very important attribute here. Job requirements continue to expand, right? So internal customers, regulators, stakeholders, suppliers. Job requirements are not getting smaller, right? Regulators are asking for more. That's both in environmental regulations as well as in accounting standard regulations for reporting and disclosing of your environmental liabilities and so on. There's a data surge that's been going on now. We all know it, right? The work that we've been doing it has been and is being digitized. It's reaching all levels of the organizations, right? From environmental data management to financial management to real estate and property management and so on. And in effect, the rate of data surge is about 2x every year, according to a recent study by IDC. So this is another very important, factor that is leading business leaders to look for agile type business models that allow them to scale up or down when needed. Tech is the engine. So we've really have seen the shift from technology as just an enabler to whereas technology is now viewed as a core strategy. And shouldn't just be the CIO of the organization. Really, any business leader, any business function leader has to be a tech vanguard. They have to know that technology really is the key to operating the most efficient business. And then finally, the reason that this topic is important is that being able to scale, being able to operate in the most efficient way gives customers remediation management programs or business functions the biggest bang for their buck. If we look at the cost structure of remediation management, we know that about 60 to 70% of total remediation costs are labor costs. We know that because we have the data, but most people probably intuitively know that anyway. So if you're writing proposals for customers, if you're reviewing proposals from consultants and contractors, you see that, right? You see what the labor components are of your SOWs and your total cost. So it's about 60 to 70%. It's a very large component, right, of our total costs. So during growth or downturns, we operate under a time scarcity. That makes time even more valuable to us, right? Because we're either growing rapidly or we've had a reduction in headcount. Using brute force to add headcount isn't an option generally, but particularly in downturns. The reason you had a downturn is because there was a reduction in force or some other mandate within the organization that headcount had to be reduced. So you're not able to use brute force to throw more people at the job. You have to find other strategies and other tactics. So as you all look at this image, you're probably asking yourself, what do a bunch of cowboys have to do with business scaling? Well, I could say absolutely nothing other than the fact that they represent the exact opposite of business scaling. So I'm really throwing up an image here, a contrasting image so that this gets kind of burnt into your head of what it is that we're really trying not to do when we talk about business scaling. We can't throw bodies at it, which adds cost, right, at the same rate that our programs are increasing. Or if we just had a reduction in force, we have a mandate not to add costs. So Cowboys don't scale. And believe it or not, we still run into remediation departments that operate like a group of cowboys, right? They're independent project managers. They work in an ad hoc way. Their systems are not modernized, and so on. The good news is that with the right leadership, they can be converted. So keep this image in mind when you think about the exact opposite of the rest of the content that we're going to show today. So automation of work is the key to business scaling capability. It is number one by far the approach that's taken when professional service type organizations are looking to scale. It's automation. There are many types of automation efforts or scope. I've listed some of the main ones here and also tried to relate those into the environmental remediation management arena. The first one being machine-to-machine automation. That's basically where a computer system is connected to another computer system and it's exchanging data. Examples there are when ENFOS is connected to our customers' ERP systems, like SAP, Workday, PeopleSoft, JD Edwards, Oracle Financials, any type of ERP system. Another example is when ENFOS is connected to our customers' real property management systems. So those are examples. It eliminates the need for people to duplicate data entry and it improves data integrity. Another scope, it would be linked processes within a single system. The example in remediation is I have my lifecycle planning and forecasting processes linked directly with my spend management processes. The next level down, process and workflow automation. If you think about a use case in remediation, environmental reserve management always boils up to the top. It's usually very hectic, right? Done quarterly, done annually with a deep dive, maybe based on certain trigger events. I've got to produce reports to upper management around potential reserve adjustments, maintain balances, and provide information for the auditors and for our 10K, 10Q disclosures. That's an example. Another example is procure to pay. Procure to pay in our world generally starts with a request for proposal, and then that becomes a proposal from an environmental supplier that includes a scope of work, a cost estimate, and a schedule, and a list of deliverables. It has to go through a workflow to be reviewed and approved. It has to follow the corporate or the company's delegations of authority processes, has to escalate sometimes for multiple approvals. Eventually it becomes approved, and then the work can begin, and now our service entries and invoices can begin, right? All of that procure to pay is part of spend management, right? The next one down is task automation. So now we're going down to a smaller level. So this could be tasks within some of those workflows that we talked about. Scope and cost, project controls as an example. Audit evidence creation, reporting. These tasks can be automated by a computer system. And really at the bottom level here would be calculation automation. So for environmental accounting, you see some of the elements here that are automated within ENFOS and should be automated. Reserve balances, reserve adjustments, net present value calculations with inflation and discounting, as well as accretion for your asset retirement obligations. So these are some examples of what can be automated in the remediation field. The chart on the right represents that as I have a higher degree of automation, I have a lower cost structure to perform that work. A lower cost structure in a labor-intensive business means less hours, fewer hours. Remember, we're operating under time scarcity, so that is the objective. I want to dig a little deeper into some of the processes that can be automated or conducive for automation in remediation management. Before I do that, though, I do want to mention a technique that the ENFOS team has as an offering for companies that are evaluating their technology and their ability to scale. It is a ENFOS business capability assessment, and it also includes a technical due diligence where existing systems and processes are evaluated against the remediation management modernized standard. We look at those assessment activities in 5 main categories: project portfolio management, financial management, environmental data management, performance management, and then finally, process and system integration. So these 5 broad areas really encompass the major aspects of running a remediation program for a corporation or for a government entity. And out of those 5, I've selected several examples to talk about. So this first one is an example within the portfolio management category. And those of you that know ENFOS know that the underlying data schema of ENFOS for a customer is the project or the organizational hierarchy. This is designed and built within the application, so it's using tools that the software has to automate the creation of the project structure and to allow it to change and grow through time or contract. At the top of the hierarchy is the owner. At the bottom in blue are projects or areas of concern. Each site that we have remediation going on may have 1 or more projects or AOCs. And again, as those projects are created and then ultimately closed, that data is being constructed and managed within an automated and highly structured schematic that is the project hierarchy structure. To automate portfolio management, you also have to have system controls like access permissions, as well as business controls that may be different from one business unit or one area of the hierarchy. So as an example, if you were in the oil and gas sector, you might have a unique work breakdown structure for our major projects or our refineries, and versus a different work breakdown structure for your underground storage tank portfolio. So the hierarchy is established to initially design and then automate the inheritance of those business rules and controls. Hierarchy is also used in portfolio management for data consolidation. So if you're running a program that has 500 remediation projects, the last thing you want to worry about doing is consolidating data in your reserve management process from 500 different spreadsheets every quarter, every year, year after year, year after year. So the hierarchy structure automates that process, as well as organizational roll-ups. If I have my project information, whether it's environmental data, or it's site attributes, or it's financial data, and I'm managing this at the lowest level in the hierarchy, I can get instantaneous roll-ups to any level within the organizational structure. Another example, this is in the financial management area, would be reserve management. we're looking at a few different techniques here. One is you're seeing integrated processes within a super process. So for reserve management, there's a forecasting and budgeting process. There's a vendor proposal management process. There's a purchasing and work commitment management process. There's an invoicing and cost recovery process. Automation, done the right way, integrates these into one super process, end-to-end financial management, with built-in automated financial controls, like you see for number 1, 2, and 3 labeled here. Uniformity and consistency of work breakdown structures, financial controls on work commitments against the reserve or the plan balance, and then finally your spend controls against your work commitments. All of this can be automated within your management processes. A slightly even more simplistic example is shown here, single point of entry example. So in your typical non-scalable management system, when I have data, I need to enter it into some application, some software application, some database, some spreadsheet. So step 1, I enter my data. Step 2, I log into some other software, or I open another spreadsheet and I enter that same data again. Step 3, I repeat this over and over again to make sure that all my platforms, all my spreadsheets, and all my reports are updated. This is redundancy at its worst, right? If this is going on in your program today, whether it's for environmental data management or financial management or site and portfolio management, then you are not operating at maximum efficiency. Here's an example where you'll see that there's a flow through of the same data point all the way through the different processes and tasks on a single one-time entry. So the advantage of having that super process where my reserve or my forecasting is tied into my budgeting, which is tied into my procure to pay, which is tied into my reporting and my data visualizations, I have a single one-time entry of this data point, which happens to be, in my example, a task and a cost pair. Task might be drill 4 wells, cost might be $10,000. So this is what you're trying to achieve with automation. Environmental data example. So in our industry, the work is outsourced to environmental suppliers. These are consultants and other contractors and laboratories. They have their own ecosystems, their own digital practices. Some are more automated and more efficient than others. But this is, what they do. You pay them to plan for sample events, to collect field data, to collect lab samples, to communicate with the labs, to manage the data quality, to produce deliverables, right, with that information, and to make very wise decisions on your behalf. But this type of work is repeated over and over again, right, on thousands of sites and sample events in each consultant's office. The customer system, shown here in the middle as ENFOS, then wants to get the data, right? And what is the most efficient, cost-effective, and seamless way that's also non-intrusive to the environmental contractors to get that content, that data, into the enterprise system? Well, it's through APIs. And these are deliverables of finalized data sets. So in addition to the PDF report of the work that I'm performing, and in addition to a PDF of the laboratory report, the customer can request that as part of the deliverable would be the final data set. In that case now, the customer is able to consolidate all of their environmental data that they've paid for and now combine that at the enterprise level with the rest of their content, their site information, their financial information, and so on. Additionally, using another machine-to-machine integration point called OData, the ENFOS data sets that are BI ready can be transmitted automatically on an automated fashion to the customer's internal data warehouse and BI applications, where they can involve ENFOS data, their ENFOS data, with other sources of data, whether it was from their ERP system or their legal system or their property management system. Another example of workflow, machine-to-machine automation, as well as integrated workflow within a single system. The next category where I'd like to talk about an example of automation is reporting. And inside of ENFOS, we're looking at a screenshot here. This is the one submodule within the reporting solution for scheduled reporting jobs. The automation is built within the application. So the end user, based on their role, they could be a project manager, they could be a consultant project manager, it could be a financial analyst or an accountant, they could be on the leadership team within the customer organization, it doesn't matter. With the over 100 standard reports that ENFOS has that are remediation specific, users can create their scheduled jobs. So in my example here, I created a weekly project manager update report. It includes 5 different ENFOS standard reports: issue tracking list report, my PO status report, my report deliverables progress, my sites, and then reserve activity life to date. I will put that job on a repeating frequency. And in my example here, I'm running this every Monday. I had a start run date of January 1st of 2021. I don't have an end date, but later on I can come in here and edit it and put it on an end date if I don't need that automatic distribution anymore. And then we add the distribution list at the bottom. Who does this get delivered to? It gets delivered by the ENFOS system automatically to this distribution list on that frequency. And as you can imagine, level of effort and time for producing and delivering reports is a significant part of those labor hours that we talked about early. And we can eliminate reporting hours and overhead to manage those and create those by automating our reporting. The next example is under performance management. So we're going to talk about a dashboard example. So people that have business intelligence experience, data science, analytics experience, they understand that they're underlying data. If I'm pulling data from multiple sources, there's a tremendous amount of work, professional services work, to prepare that data, clean it up, denormalize it, create the joins from table A to table B to table C, and so on. With an automated business intelligence data management system, this is done behind the scenes within the application in the course of people doing their work. So you can see here we're looking at a data table, and once a dashboard has been designed and built, and it's built to be dynamic so that as new data comes in, it's updating the data set. So I have real-time visualizations and tables in the dashboards that we're sharing. I have now automated performance management. So again, I don't have to pay an army of consultants to go out there and manually produce these or manually update these from time to time. There's the initial set design and setup and build and test, but Once that's finished, then it goes into a sustainment mode where there would just be some routine maintenance from time to time. Again, another major cost saver and another way to automate tasks and activities that are repetitive, done over and over again. And again, it helps us do more for less. When is it time to scale? So I've got some no-brainers in the left-hand column, and then some that take a little more foresight in the right-hand column. Mergers and acquisitions, certainly a time to scale. You need to be able to scale during a merger and acquisition, right? Because you're taking on more work. The program size is growing. You may or may not have the same amount of staff internally to manage that work. Usually during a merger and acquisition, the corporate executives are looking for cost savings and they're looking to leverage infrastructure. So your costs usually aren't going up at the same rate as your program size growth, so you need to scale. Company downsizing events, we talked about that. That's the flip side of growth. The effect is the same, right? Your survivors are left doing the same amount of work and sometimes with even more increased demands. So they need to have the systems and the technology to help them do that work the most efficient way possible. And then other growth opportunities. We've seen some customers in the remediation function reach out internally into their organizations to take on different types of work, such as asset decommissioning, such as capital project management. So there's always other growth opportunities that are available, and that would be a time to scale as well. Those on the right-hand side that take some foresight would be business transformations, some planned staff level attrition, right? We're not, as people retire, we're not replacing them, right? That's an example that we hear a lot about. So our staffs through time are going to, staff levels are becoming smaller. And then during increased demands or increased requirements to do the job. So those could be regulatory demands, they could be internal customer demands for more information, more transparency. There could be more compliance requirements and so on. So in conclusion, having agility to scale during growth or downsizing is a business capability that can be developed. Now, one of the things that I did have on a slide earlier, that it's leadership's role to plan for this in advance of one of these major events. It's not always feasible for various reasons, but if you do have the opportunity to plan for this through time, then you actually want to do that. But the agility to scale, if you have this already in place during growth or downsizing, then your business is going to be the least impacted. Leadership must drive this capability and the culture of operational efficiency. That's what this is all about, right? It's not going to happen on its own. It takes leadership, and it takes those in leadership positions that understand the value of technology. And then finally, automation through purpose-built technology that's made specific for remediation is the key to delivering scalability. And that concludes the main body of the webinar today. I'm gonna turn this over to Michael Douglas, and we're gonna see how many questions we had asked during the session, and we'll attempt to answer those. So Mike, I'll hand it over to you.
Great, thanks, Roger. So we've had a few questions come in already. Just as a reminder, over in your GoToWebinar panel, there's a question section. There's also a chat section, so feel free to ask any other questions there, and we should have time to get to them. But I'll run through a few that we've already had, Roger. So first question, why is having a single remediation management system more efficient than having many?
Okay. The during our experience with our business capability assessments that we've done over the last, say 10 to 12 years, what we found out is the average number of systems that a remediation function's using to run the program is about 10 different systems. And so that's a lot. And the majority of those are not integrated. So, the easy answer there is that having 10 different data management sources to run your business instead of one is just inherently less efficient and less effective. Duplicate data entry is required, extra processing time and data preparation time, and so on. There's data quality and data integrity issues as well, because each time information has to be re-entered or rekeyed, there's a higher probability of error or data quality or something being missed. The certainly you can integrate systems together, but integration costs money, it takes time, and there's also ongoing maintenance. So that's an element that is eliminated if you've reduced that down to one core system that's feeding your ERP system. The another answer to this question is that data in context is more valuable than data on its own. So having environmental data that's not joined and integrated with your financial data is lost opportunity. The information can be enriched, the data can be enriched when it's combined with our other enterprise data. So those are some of the reasons. There are a lot more. Actually, I just thought of one more that I should mention. Those 10, on average, I said a remediation function was using 10 systems to manage their program. The majority of those systems are not purpose-built for remediation. They're generic in nature, right? Generic business systems, such as a project management system, a construction management system. Those are generic in nature. They can be, used for any kind of a construction project, and they're not designed specifically for an environmental liability or an environmental project. They don't have the accounting logic built in and the calculation logic built in. So they breed shadow systems because of that, right? If it's not purpose-built, it can be used. It's going to fulfill only part of the need, and then the people on the team and the consultants are going to build shadow systems, and those are usually spreadsheets, which just becomes more and more less efficient. Okay, Mike?
Great. Yep. As a consultant, what are some of the ways that we can operate more efficiently when our customer has implemented ENFOS?
Yeah, great question. Many ways. One certainly would be to dedicate the time and the resources and the effort to learn the system, to use the capability as the system's designed. So that is looking at training documentation, looking at all the videos that ENFOS has up on the website. It's reading white papers that have been written by ENFOS or ENFOS customers, understanding the value proposition. So that would be really a fundamental aspect of it. The a more technical way to be more efficient would be to utilize the ENFOS file importing processes more effectively. So when we train and implement ENFOS, we generally will train people on how to enter the data through the user interface, right? Because that's what people see on their screen. But almost every single data category in ENFOS can be created and entered via a file import. So I can construct a cost proposal directly in the user interface, or I can construct a cost proposal in my consultant's accounting system or cost estimating system. I can use that system to produce automatically the ENFOS proposal import file, and then that can be imported automatically, right? It can be emailed, it can be imported through our file importing page, and in many areas, and more coming soon, it can be entered via an ENFOS API for different types of data objects, like proposals, like invoices, like sampling results, and so on. So using technology instead of just using the user interface to load data, especially bulk data, is something that consultants can do on behalf of their customers to be more efficient. So those were a few examples.
Okay. Couple good. I love this one. Okay. Do you see clients changing their commercial models to encourage consultant efficiencies? As an example, T&M to fixed price.
I don't know the answer to that question. Maybe that's happened. I can't think of examples where they've changed it,
Mm-hmm.
but I do know that contracting and procurement or departments, when they're working on behalf of the remediation function for contract renewals and master service agreements, they're using ENFOS data produced by ENFOS to help them leverage that purchasing power, right?
Right.
So
Right.
that would be looking at labor category utilization, right? Principal engineer versus senior engineer versus, hydrogeologist. Looking at tasks and looking at hours that have been, purchased through spend management and invoice details, and doing comparisons across multiple consultants, not only on what the hourly rates are, or if it's a non-labor rate, what the equipment or material rate is, because all that content is in ENFOS as well. But to actually look at utilization, right? Who's utilizing the right labor category, and that's a value judgment that ENFOS can't make. But the data is there, right? The data is there for the remediation management team, as well as maybe contracting and procurement teams, to evaluate that. Yeah, so there's different combinations, right? ENFOS does allow time and material. It allows unit pricing. It allows fixed price by task and or lump sum per project. And those different contracting mechanisms all have different types of data that can be, queried and analyzed to make, that more efficient and to maximize the supply chain.
Okay. Several comments about the dashboard example that you showed, Roger, and several people have asked, how was that created? And how can I get a demo of that?
Okay, sure. Well, the individual that created that one is an ENFOS technical services manager named George Burnett, so I'll give him credit. And George is the ENFOS application BI expert. And there's ENFOS offers a BI connectivity service that new customers or existing customers can purchase from us. And there's an initial setup fee for that. And basically what it does is, using an API called OData, that is connected to the customer's BI application of choice. It could be Power BI, could be Tableau, it could be really any BI application. And that data set, it's called the data domain, which is multiple data sets and tables, that is automatically transferred via this API to the customer's BI application. ENFOS can help design and build those, and then transfer that end result to the customer's BI system as well. On our roadmap is to embed those dashboards back into the ENFOS application. So that's a roadmap item for ENFOS as well. So I think I've answered all that, Mike. I guess the best way to get started would be to contact us and ask for a more detailed demonstration, and ultimately that could result in a cost proposal and a statement of work.
Yep. That's a good segue into another question, Roger. So the question is there a preference or difference between using an API versus a bot?
Well, sometimes questions get asked that just go over my head, so that I really can't answer.
Well, I could take a stab at it, Roger.
Go for it.
So, first understanding what an API is. API stands for Application Programming Interface. This is a vetted interface that is developed by software companies to dictate how other systems will integrate with it, right? So it's already gone through a vetting process on the software developer side for another software company to be able to integrate and then push data back and forth. Whereas a bot would be something that is custom developed, right? It's not going to be vetted by the software solution that you would potentially be using that with. So I would say that there would be a preference to use an API wherever possible because it's likely going to be a more stable interface mechanism.
Perfect. Thanks, Mike.
Yep.
We got a little bit more time. Are there some more questions? Okay.
Yeah. Here, let me scroll back up and grab one here. Okay. How are adjustments reconciled when going from budget to proposal to final invoice?
Okay, read that one more time.
Sure. How are adjustments reconciled when going from budget to proposal to final invoice?
Okay, I'll try to answer that because
Yeah,
I don't fully understand, but I do somewhat understand it. Okay.
Yeah.
The end-to-end super process that I talked about started with what we call planning and budgeting. Some of our customers will use that for their life cycle forecasting in name, right? And then the roll-ups of those numbers are used for their reserve, but the reserve setting is an accounting practice that may or may not be aligned with what the life cycle forecasts are, right? Some of our customers do operate while they're using, they use ENFOS specifically for the reserve management, and any reserve adjustments that get made get pushed to, corporate accounting, and then that's what the adjustments are made on the balance sheets for that period of time. But so there's different use cases, right, in terms of how customers use that end-to-end financial management process. But in ENFOS has, when you go from, let's say, a budget to a proposal inside of ENFOS, there are financial controls that are automated, and the customer has options to consider on how they move from a budget to a proposal. And as an example, since we know remediation, typically lasts multiple years, the budget can be either considered the annual operating plan, or it can be considered the life cycle forecast, right? Again, every customer handles that differently. If it's the life cycle, and you're moving into the proposal stage, then whatever my plan balance is at the moment a proposal is trying to be authorized, ENFOS will check that proposal amount against the available to commit from the plan balance to make sure there's enough money to commit. If there's not enough money to commit, then that proposal, which would ultimately become a purchase order, is not approvable, right? And so that we would call that a full plan financial control. If the customer wants to operate on an annual budget control, then ENFOS can control the work commitments made in the current year, as well as the spend in the current year, so that the spend, the actual approved spend, cannot exceed the baseline budget for that annual operating plan. If you're making an adjustment to a plan and there are open commitments, ENFOS makes sure that the new plan that you're getting ready to approve is funded to the level that will capture your open commitments. Because what you don't want to do is create an adjustment to your plan that shows a lower dollar amount than what your open work commitments are, because then you're underwater. And ENFOS has a financial control for that as well. And that trickles on down into the invoice also. The only time ENFOS, with certain settings, the only time ENFOS allows a budget or a approved proposal to be exceeded is if it's a transaction that came directly from the customer's accounting system. We call it a reconcile transaction, because that's coming from SAP or Oracle Financials, and it's saying there's a journal entry, or there's a non-PO invoice, or there's some settlement hitting this project. ENFOS needs to know about it. That cost was not vetted in ENFOS, so ENFOS allows that to overspend the budget, right? As an example. Again, these are all settings, but probably without seeing that on a whiteboard, that might have been hard to follow, so I apologize for that, but I attempted to answer the question the best I could.
All right, thanks, Roger. We've got time for one more here. So this is from an existing customer. I've already implemented ENFOS, but have not utilized all the options shown today, and I do see room for improvement. What are my next steps?
Yeah, great question. And I would say the first step would be to contact your ENFOS account manager. And that's either going to be me or Tori Behrens or George Burnett. And that would be your first step, would be to contact us and or put it on the agenda for the next time that we have an account management review meeting, and we should talk about that. I think that it's always on ENFOS to keep our customers current on our new features, because we do quarterly releases in the software. We have two different types of communication mechanisms for that. We do two types of release notes, one more technical and one more kind of business oriented. The release notes are always inside the ENFOS application as well on one of the landing pages. But we also then like to review those during account management review meetings, with our customers, so they can be kept abreast of new features and also modules or solutions that aren't currently being implemented by that customer.
Great. So Roger, can you go to the last slide? Yep, perfect. Just so anybody that isn't already, have a contact person within ENFOS, if you're interested in having a follow-up discussion, feel free to reach out to me directly. My email's right there. I know some of you are also talking to Evan. So feel free to reach out to Evan as well. As we mentioned at the top of the webinar, the webinar today was recorded, and the slides along with the recording will be sent out automatically. Usually that goes out within the next couple days. So again, appreciate everyone's time today. Thank you for attending. Hopefully you found it valuable, and be on the lookout for an alert on our next webinar. We're trying to do these quarterly. So thanks again for your time.
Thanks, everyone.